Hi, so today we're going to talk about investing. So a couple of weeks ago, I attended a super interesting forum that was held by Burgundy Asset Management, which is an asset management firm here in Toronto. And very, very interesting. It was a bunch of investors, their clients, some of them were not their clients like me. And the theme of the year was staying global in a deglobalizing world. And I think it was particularly timely. And I had two keynotes that I really enjoyed, and I'm going to give you a bit the lowdown on that. And it really made me rethink, what diversification means when it comes to investing in a world where, capital, narratives, attention are all getting a little more domestic. So thank you for being here. My name is Peggy van der Plas. And if it's your first time on the podcast, welcome, welcome. So what was my takeaway from that forum? So I would say the best investment approach is still the simplest one. Focus on compounding. So good businesses, but at reasonable valuations, held through the cycles. That is what actually they were pitching in terms of the right approach to investment and the approach they are following and justify their higher returns compared to the benchmark. So look for businesses that create value, adapt, and keep going, especially when the markets get choppy, because they will get choppy. I know we're always surprised when the markets don't perform as well as the year before, the year after, but that is the definition of the financial market: goes up, goes down. So as one of the speakers put it, we are all bound to pass through rough seas. And again, this is a feature of long-term investing. It's not a bug. So when you see your holdings going down, keep your head cold, because that's what's happening. So the first keynote that I really enjoyed was from their CIO, and a lovely, lovely woman, very, very sharp. Her name is Mette de Filippini. And I don't know if she was from Europe, but she definitely had a hint of an accent, definitely lighter than mine. And she definitely looked European. So I don't know, maybe she's from the Netherlands. And she really, I mean, she did not disappoint, really, really sharp woman. And she was very calm, very pointed delivery. And she challenged several lazy assumptions that we can hear in investing today. So one of her early comments, which was half joke and half truth, really set the tone. She was like, well, why don't we invest more in the winners and less into the losers? And that obviously is 2020 insight. I know it seems obvious, but when you're talking about investments, oh my God, I've been hearing so much of that in the private and public market, which is obvious after the fact. Everyone would have invested in Nvidia, of course, but you know what? We didn't. So, and what I really like with that comment, it's really a reminder that performance attribution often comes with insight, and that conviction needs to be earned in real time and not justified retroactively, which is very often what we see in the investing world. So she really revisited diversification, and not as a spreadsheet exercise, but really as a principle of humility. And to quote Buffett, they really like Buffett in that shop, diversification is a protection against ignorance. But Annette look at it a bit differently. Diversification is a protection against ignorance, but not at the cost of understanding what you're investing in. So diversification only works if you understand what you own, why you own it, and how each piece contributes to the whole, because obviously there is a portfolio allocation strategy as well to take into consideration. One thing that I thought was super interesting as well is that she referred to endowment style investing, and she was really skeptic about that. So this idea of very high complexity, obviously a lot of fees, because the more complexity, the more fees, and not enough transparency. And that is really this idea of diversifying so much that technically you don't really know what you own. And this is really this idea of institutions that are chasing premium returns with premium structures, but with no actual premium showing up in the results. So it's a very good reminder that complexity doesn't equal quality, and that diversification without clarity can actually destroy value. So again, when you think about diversification in your own portfolio, or if you invest as an institutional investor, there is something important here in terms of you want to diversify, but to a point, exactly. So she pointed out opportunities outside of the US, and she was suggesting smaller and mid-sized companies. She was mentioning regions, areas that don't dominate the headlines, because today the US stock markets are lagging, even as the US economy is supposedly stronger than Europe's economy. So it's a bit so much for this story of American exceptionalism. So there is a very large hunting ground in the rest of the world. We tend to forget that in North America. And this hunting ground is filled with underappreciated opportunities that are just waiting to be discovered. So she also emphasized that investing isn't about chasing market trends, but it is about recognizing, once again, that price is not the same than value. Price is what you pay, value is what you get. So achieving balance doesn't mean swinging between extremes, but rather holding firm to discipline through volatility. So again, from volatility comes that ability to compound, and that's where the real value lies. So that's in a nutshell what Anne was talking about in her keynote. So the second keynote that I really love, very different delivery style, was on Europe. And the gentleman who delivered that keynote, Kenneth Broekaert, is a SVP and portfolio manager at Burgundy Asset Management. So he brought a very different flavor to his presentation, a bit more narrative, a bit more history, but also a touch of dry humor. So it was quite funny, but in a very undercover way, like you need to, it's not the but it was very smart, funny, smart, dry humor. So his panel was actually coming from a very provocative question. Is Europe a relic, or is it a rising opportunity? And what's been interesting is that since Liberation Day, I'm sure you're familiar with Liberation Day, the tariff that are put in place by the Trump administration. So what Kenneth was saying is that since Liberation Day, investors have asked themselves whether they were too concentrated in the US. And I think that question is still very relevant and increasingly worth revisiting. And his answer was very unequivocal. Europe is not just relevant, it is robust. It houses some of the best companies in the world, particularly in healthcare, in consumer goods, and in industrials. And many of these businesses are actually leaders in their categories and in their geographies, and they benefit from real scale. He was showing us some advertising from Heineken, for example, who did a fun advertising with Verstappen, who's a Formula One champion. Well, you cannot really do that unless you have a very deep pocket. And they really benefit from this scale. And from this scale, they also build very resilient models. High recurring revenue, limited exposure to global supply chain disruption, which today is important. So the preference of Kenneth, companies that produce where they sell, and that is not new from 6 months ago. Is it something that is always liked? And that's something you see a lot in Europe. And today it is a structural edge in an era of tariff and fractured trade routes. So he made the case actually that European equities offer stability, lower valuations, but also higher dividends, which is a very rare combination in today's market. So healthcare companies, if we look at that, they provide essential products in any and every economic environment. You're going to take your medication regardless of the interest rate level or of the economy level, So that is very robust. Industrial firms in Europe, they're often looked as boring, but I love boring personally, especially boring with recurring revenue. That can be a beautiful thing when you're looking to compound earning over time. And what really struck me the most was Kenneth's quiet confidence, again, in the compounding power of European returns. Europe, as an average, is never number one when you compare all the geographies, but they're never the last one either. It's a bit like this fable, the turtle and the rabbit, like Europe is more the turtle, but at the end of the day, turtle win the race. So what Kenneth was looking at when he was mentioning Europe as a great investment opportunity, it was not, like a contrarian bet. It was really like a smart, grounded strategy for investors that are willing to go, beyond the headlines of tech in the US and lean really into fundamentals. So my final thought on that is really, the world is really turning inward, and actually looking outward may actually be the edge that we need. And staying global doesn't mean owning the market. It means owning what compounds. And more often than not, that means looking beyond what's obvious. So I hope you enjoyed this little recap. Again, it was the forum from Burgundy Asset Management, very interesting company, very interesting event if you have the opportunity to attend next year in person or online. And again, my name is Peggy van de Plage. You can learn about me on my website, peggyvandeplage.com. And thank you so much for being there, and don't hesitate to subscribe if you want to get more of that. Thank you so much. Take care.